You guys are a good crowd. I mean, 5 minutes and you all just found your seats. There's a few more seats scattered around, so if other people come in or if staff wants to sit down. Well, thank you for being here and welcome. It's great to see you all. Thank you for joining us on what turned out to be a little bit of an overcast day, not quite as beautiful as in the past, but the staff and I are truly delighted that you're here. And most of you are clients. But we are delighted to have many guests with us this evening as well. And so let me take this opportunity to invite all of our guests to become clients. I had to put in a little commercial. We have, if you have a need for financial planning or investment management, sometimes dubbed wealth management, we hope that you'll think about us. We're fee only, which means we don't sell anything, no commissions. We're fiduciaries, which means your interest comes first. We're highly credentialed. Everybody's either a certified financial planner practitioner or a chartered financial analyst. So that's important to us, and we take a very comprehensive approach. So we really do financial planning, and the reason we do that is because we want to make sure that every aspect of your financial life is really covered. But the most important part, that really tells us how to manage money. It tells us what your money needs to do for you, so we know how to manage it in your best behalf. So we love what we do, and I could talk about it forever, but I don't think that's why you're here, and I am preaching to many of our own choir members. But if you're interested, we would enjoy talking to you more, so before you leave, feel free to pick up some information on the way out from some of the other staff. As many of you know, we just celebrated our 25th anniversary for our firm. It's kind of like time flies, not sure how that happened, but we would not be here had it not been for a really great staff, and I always want to take every chance I can to kind of thank and recognize them. It's a great team. They're all here tonight, so if you won't mind just helping me thank them for doing such a great job. Okay, enough about us. Let me introduce our speaker for this evening. And do we have good timing or what? We didn't just plan this yesterday. This has been on the calendar for quite some time. So it just so happens that we caught a time when things are at fever pitch in Washington, D.C. And our speaker, Greg Valliere, is going to be the person who can fill us in on all the stuff going on and what the consequences may be. But Greg is a chief political strategist for the Potomac Research Group in Washington, D.C. And it's really a nonpartisan firm that advises investors, all of us, on how Washington policies could affect the markets. So pretty timely on our part. Greg has been covering Washington for about 30 years. He began his career as an intern at the Washington Post and later formed the Washington Forum. Since then, he served in several roles, including Director of Research at the Charles Schwab Washington Research Group. Greg specializes in coverage of the Federal Reserve, tax and spending policies, and of course, politics. Greg is widely quoted in the financial press, and many of you may have seen or heard him. He's a regular guest on CNBC, CNN, Fox TV, Bloomberg TV and radio, and is a regular commentator on CBS radio. He's a graduate of George Washington University, and he and his wife, Mary, live in downtown Washington in the Watergate building. Okay, so we know by the age of the crowd, everybody recognized Watergate. So Greg is going to speak for about 25 or 30 minutes, and then he really wants to open it up to questions. So be thinking about your questions that you might have for him. You all have notepad and paper, so write them down, and we'll be sure to try and take as many as we can in that last 30 minutes. So thank you all for being here, and help me welcome Greg Valliere to the podium.
Thanks, Elaine. Thank you. Well, thank you. I guess I would start by asking you a favor, and that is, don't shoot the messenger tonight, okay? Don't blame me for any of this stuff. It's so bad that when I fly, which is almost every day, the person next to me often asks me what I do for a living. And I debate, should I tell this person that I follow Washington for a living, or should I tell him I'm a drug dealer? Which would get me more respect in terms of what I do. It's that painful right now. I don't know if this is going to work. I'm a Let's see, is that going to work? Okay. Well, I've got a lot of themes I want to talk to you about tonight, and believe it or not, I come to you this evening as an optimist about even Washington. And you may think that I am medicated. I've had 2 Advil today, and that's it. I have not in any way been medicated, but I do think that there are some very big themes that the media overlooks. So let me talk to you about some big themes that I think are important for investors. And I would just start by saying that biting the hand that feeds me, the press, the media, whether it's CNBC or whomever, they love to stir the pot. They love to get good ratings. They love to sell newspapers. I have friends of mine at CNBC. I tell them, if they thought they could televise live rooster fighting and it would be good for ratings, they would do it. That's the nature of the media, and they often don't talk about the positive themes. My friend George Will, the great commentator, had the classic line. He once said, you know, the way the press is now, if Edison invented electricity like last night, all the newspapers now would have headlines in the morning, "Depression hits candle industry." That's pretty much how the press views everything. And to my constant amazement, there are so many really positive themes that do not get much attention. Let me just mention a few, then we'll get to Washington. The U.S. is getting very close to energy independence. That is not widely appreciated. You look at the Dakotas, you look at fracking, it's a tremendous story. There is a manufacturing renaissance in the U.S. My friend Liz Ann Saunders at Schwab and I appear together sometimes, and she was asked, what area of the world are you the most excited about in terms of economic growth? And she said the Midwest in the U.S., the central middle America, because manufacturing is coming back. The housing industry has come back so much, people are now worried about a bubble. The auto industry has come back. We see corporate balance sheets probably at the best in our lifetime, the way corporations have restructured debt. We see 49 of the 50 states in pretty good shape, Indiana being one of the best. Of course, there is one of the 50 that's in a different solar system. That, of course, is Illinois. I won't dwell on that subject, but 49 out of 50 is not bad. And you go right down the line of all these tremendously positive stories for the markets, and then come to my city, and I will try to make the case to you tonight that even in my city, there are 2 dominant themes that still look very, very positive, despite all the theatrics that we have to talk about. I'll get into that later. All the theatrics that we're seeing this week and maybe going into next week are unnerving. But the 2 big positive themes in Washington will prevail. The first theme is, quite simply, this is the most dovish Federal Reserve in our lifetime. There can be no doubt about that. It will get even more dovish with Janet Yellen, who will be confirmed as chairman, replacing Ben Bernanke. The center of power at the Fed is comprised almost entirely by doves, and the market loves this. It's Bill Dudley in New York, it's Charlie Evans in Chicago, it's Williams in San Francisco, it's Kasha Lakara in Minneapolis, and on and on and on, of officials who are determined to keep the federal funds rate at about 0 for at least a couple more years. Now, there are some people, my late mom always used to berate me and tell me I should call up Bernanke and demand that he raise rates because she was counting on higher yields in her retirement. There might be a few people like my mom in this room tonight who are hoping for higher yields. There are people like Chuck Schwab who feel that Fed policy is punishing savers. There are people who disagree with the size of the Fed's balance sheet. I'm not here to say who's right or wrong, but I am here to say that this extraordinary dovish policy at the Fed will continue for at least a couple more years before they start really thinking about taking away the punch bowl. So why is the Fed so dovish right now? I think there are 2 or 3 reasons, which I'll describe. The main reason is one, when I say this, people look at me quizzically. People at the Fed are worried about inflation being too low. The Fed's favorite indicator of inflation, the so-called CPE deflator, that's a mouthful, but their favorite indicator has only risen by 1.1% in the last 12 months. And I get pushback from audiences who say, well, have you seen my prescription drug bill? Have you seen food bills? The main indicator the Fed looks at is unit labor costs, and there is no inflation whatsoever on the wage front, none. And on many other areas, giving them an inflation rate that worries them a little bit. The last thing you want is to have inflation so low you start looking like Japan did for about a decade. When I started my career, there was this very funny, crusty old economist, and I remember asking him what he thought about inflation. And he said, "Kid, inflation's like your blood pressure. If it's really racing, you're going to have a stroke." He said, "But then again, if it's zero, you're dead." So you have to find a balance, and the Fed is a little worried that the inflation rate, believe it or not, is a little low. They have to worry about the fiscal insanity that's going on in Washington now. That's another reason why I think they're in no hurry to move. I think they're also concerned about a fourth quarter GDP rate that is going to be a disappointment, largely because of the shutdown and the psychological uncertainty surrounding that. So this Fed is in no mood to begin even starting to taper the amount of asset purchases they make. I can tell you from talking to a lot of people at the Fed, and one of my dear friends and a consultant of my firm is Don Cohn, who was the vice chairman until Janet Yellen took the job. Just about everyone at the Fed realizes they have to start winding down this balance sheet. They can't keep raising it forever. They don't want to plant the seeds of inflation 6 years down the road. They don't want to have anybody talk about a bubble forming, for God's sake, in real estate. I was in Los Angeles a couple of weeks ago. People in Los Angeles are breathing a little easier because during the summer there was clearly a bubble in real estate. You don't want to see that. So the Fed eventually will begin to take the punch bowl away. But I would say for now, this first theme is in place and will be in place for quite a while, and that's a very dovish Fed. And I don't have to tell Elaine and her colleagues that it's an adage in our industry that you don't fight the Fed. The Fed is a very powerful force, and the Fed is determined to keep the equity market in good shape. So that's the first theme. The second big theme coming out of Washington is one where many people look at me, again, quizzically, like, what kind of drugs is this guy on? But I would tell you the least appreciated story in American economics today is that the budget deficit is plunging. It's in free fall. The deficit in the year that ended about 2 weeks ago, we'll get the final numbers in about a week. It'll be down by well over $400 billion from the previous year. In this new year, the deficit will get easily below 4% of GDP. I think next year will be below 2% of GDP. 3% is the average since World War II. And if someone buys me a beer tonight, I might even predict we could get close to a surplus by 2016. What an astonishing story. And nobody talks about it, and people look at me and say, well, why has this happened? How did we get such a dramatic improvement? I'd say there's three big reasons why the deficit looks so good. The first is the one reason that's always overlooked when people talk about the deficit. They talk about runaway spending and profligacy. The most important variable is receipts. Revenue growth has been a very, very pleasant surprise over the last year or so. Now, I'd be the first to concede that some of it is that Fannie Mae and Freddie Mac have had huge profits that have gone back to Treasury. And I'd be the first to concede that late last year, there was a surge of capital gains payments because people wanted to take advantage of a 15% cap gains rate before it went up to 20. But even if you strip out Fannie, Freddie capital gains, the corporate and individual tax payments this year have exceeded expectations. And that's common as an economy starts to turn around, that the official bean counters often get it wrong. So I would argue that receipt growth will continue to be a pleasant surprise for the next couple of years. There's two other big reasons. The second one is that there is absolutely no new spending, none. And I will go back to the House several times and talk about the dynamics in the House, but you can certainly say that the House will make sure that there's absolutely no new spending. When the President in his State of the Union address had this long laundry list of investments, investments on high-speed rail, investments on green energy, he said none of these proposals would raise the deficit. And I wrote the next morning that he was absolutely right, because none of them will ever get enacted. There's absolutely no chance of any new spending. I meet people in talks like this who bring up the fact that our infrastructure in the U.S. really needs some fixing, and there are some worthy causes, but not with this Congress. There will not be any new spending. The third reason why the deficit has come down so much is quite simply we are actually now seeing real cuts for the first time in my career. Usually in my career, when people talked about spending cuts, what they meant was reducing the rate of increase. Now we're actually seeing spending being reduced through this sequester. Now the sequester is much despised. It's despised at the Pentagon, which feels that this is starting to cut into the muscle. It's despised by liberals who feel that NIH should be fully funded to do research on Alzheimer's or whatever. But I think the path of least resistance may give us another year of sequester, $110 billion in real spending cuts. And as they say, you can look it up. You can go to the Congressional Budget Office webpage and look at the figures, and domestic discretionary spending is actually falling. It's fallen for the last 2 years, and it's going to fall again in the next year. So you add it all up, good receipts, no new spending, actual spending cuts, and we have a surprise on our hands. We have a deficit that is plummeting, and I think will continue to do so for a couple more years. So those are two very, very powerful themes, a mood of fiscal restraint and the Fed being so dovish. Now, people ask me, how much longer is this mood going to last of fiscal restraint? I would say that it will last as long as the Republicans keep the House. And in the last few weeks, they have done their damnedest to try to jeopardize the scenario of them keeping the House. I would have to argue, though, that the chances are still quite good that they'll keep the House simply because of the way the districts are drawn, or some might say gerrymandered. It's going to be hard for the Democrats to get a net of 17 new seats in the House. So my feeling is that we've got another 2 or 3 years to go with the House exerting this tremendous pressure for fiscal restraint. So I think these two stories have legs. So we have finished the dessert. Now we move on to the broccoli portion of my talk, and we talk about the less palatable stuff, and that, of course, is this appalling dysfunctional display that we've seen in the last few weeks. It is, there are many reasons why. Everyone wants me to take a position and bash one party or another, but I think both of them are equally complicit. I think that the big problem is that everybody in my city is thinking almost exclusively about 2014. That's how these people think. You know, Harry Reid feels he has the Republicans on the run because their polling numbers have gone way down. So he wants to hold out for even more concessions from the Republicans because he wants to make them look bad for the 2014 election. As if anybody in this room or around the country actually cares right now about 2014. But that's how we think in Washington. And we've got an element in the House that makes me feel kind of sorry for John Boehner, who's got the toughest decision in his career in the next 48 hours. John Boehner can either say, I'm sticking with my troops, or he can say, I have to get votes from Nancy Pelosi. We cannot let the U.S. default. If he does that, if he goes to Democrats for votes, he could lose his job. So Boehner is in a really difficult pickle because there's a big chunk of Tea Party members and sympathizers who, quite frankly, are on a mission from God. I've talked to these people. You know, they feel the government is out of control and they feel they have to stop it. I had a conversation. I was down at Fox. You meet a lot of interesting people at Fox. So I was down at Fox for a TV hit late last week, and I ran into a couple of Tea Party members. One is a household name, but it was all off the record, so I won't mention his name. So I said, don't you guys realize that you're perhaps going to cause real damage to the financial markets? And they said, we don't care. I said, don't you guys realize you could do real damage to the Republicans in 2014? They said, we don't care. I said, don't you realize that you could start scaring senior citizens that they won't get their Social Security check? They said, we don't care. They are that determined to make a stand now to try to extract some concessions. And as of a half an hour ago, I was on the phone. The House will come up with a new bill, but there will be a demand still for some concessions that will go back to the Senate without getting hopelessly bogged down in the boring minutiae of how the Senate and House work. I would say it's looking increasingly like you may not be able to get a deal tonight or tomorrow, which means we go to the 17th of October, a date in which the Treasury Department is saying they do pretty much run out of money. Now, I'm a cynic. as Elaine knows, and some of you probably can tell, and I would argue that October 17th might not really, truly, honestly be the drop-dead date. It could slip until around the 1st of November. On the 3rd of November, they will not have enough money for Social Security checks. The one thing the markets really are concerned about is obviously default. You can't fool around with default. I mean, the U.S. is the ultimate safe haven for investors around the world. I think Treasury can get into late October before they default, but we're getting close. I mean, it's like we're playing with fire. One of the leading credit rating agencies this evening threatened a downgrade on U.S. debt. And even if this does get resolved in the next few days, and it will, I don't think there'll be default, we're doing some real damage to the U.S. brand. To have foreign investors see a spectacle like this is something that you really don't want to see. Again, I don't see the worst of all scenarios, and that would be an outright default. But there is another story that bothers me quite a bit, and that is whatever deal we get in the next few days, we'll simply just kick the can down the road. It's not like we're going to resolve all of these big issues on entitlements and taxes. If we kick the can down the road, the Senate is talking about having another crisis date of January 15th. The government could shut down then, they're saying, if we don't get a new deal. And then another crisis after that on February 7th, when the debt ceiling would expire again. And my reaction is, are these people crazy? Do they want to just keep doing this over and over again? Can you imagine the impact on psychology for U.S. businesses, for U.S. consumers, for investors? Who can make a decision with this kind of uncertainty persisting for month after month after month? So I worry more about the corrosive impact of all of this on GDP, more than I worry about default. Default is low probability, very high risk. The risk of a corrosive impact on GDP is a high probability and a fairly high risk, I think, to overall economic growth. So this is a crisis that does not have, in my opinion, any easy resolution. If you see a deal in the next 48 hours, there'll be euphoria, I'm sure, in the press, but my response would be they're just kicking the can down the road. There's still another fight to come. So that's the broccoli part of my conversation, and I would just add that the only thing that excites me from a policy standpoint in the next 2 or 3 months is that they will reconvene and try once again to come up with some reforms. I think there's a credible case to be made that we need to begin looking at entitlements, not with a meat axe, but this idea of slightly changing the COLA, so-called chain CPI, which would not have a very big hit on recipients of federal pensions, Social Security. That's doable politically, and it saves $250 billion over 10 years. If you could get something like that, and I think even Obama would agree to it, you still have to get the other part of the deal, and that is some new tax increases that the Democrats will insist on. And frankly, I don't see any new tax increases coming out of this House. I think the House is pretty much resolute that they will not raise any taxes. So the only thing that might prompt a deal is if people are so disgusted and sick of the sequester, that might prompt them to come up with a deal between now and Christmas. But my guess is we're going to be right back in the soup again with all of this dysfunction, all of these arguments. It's, again, don't shoot the messenger. It's a story that I don't like. None of us who follow this for a living are happy to see this. I think we're all Americans first, and we feel it's humiliating to see this kind of activity go on. Well, what does all this mean for my favorite subject? And I can't end with such a down note on all of the budget dysfunction. So I have to talk a little bit about my favorite subject, and that, of course, is politics. And we're in a pretty interesting season right now. Earlier than usual, you say that every 4 years, but it does seem to get earlier than usual, to see people now posturing for 2016. Just to recap again on 2014, I think the Republicans keep the House. I think their chances to take the Senate, which looked pretty good about 4 months ago, have diminished. I think they'll win 2 or 3, 4 seats, but they won't get the 6 that they would need to take the Senate. So what are the big political trends right now? I'd say one of the biggest in my entire career of following this is the emergence of a totally new political movement that transcends the two parties. It's partly libertarian. Rand Paul is certainly a leading proponent of a libertarian view. Most young people could care less about gay marriage. I always say, let them get married. Let them suffer like the rest of us. You know why? That's a cheap shot. But this libertarian movement also favors the legalization of marijuana, and that may be one reason why Paul is popular with college students. Part of this movement is also very isolationist, and I would say one of the most intriguing political developments in the last decade has been the emergence of an isolationist movement that was clearly provoked by the disastrous handling of Syria, where this administration, and I'm not an Obama basher, I'm on the 50-yard line on most things, but I think you'd have to say that his handling of Syria was amateurish. And it has provoked in the country a real antipathy to any further foreign engagements. You could say George W. Bush deserves some of the blame because we didn't find weapons of mass destruction. You could say Americans are sick of seeing young people come home without limbs. But for whatever reason, the country has turned deeply isolationist. And I said during this debate, and I got a lot of angry emails when I said this on TV, but I think that while I understand a move toward isolationism, there are three really big consequences of this fiasco with Syria. The first consequence is that Vladimir Putin is the most powerful person in the world. The second consequence is that Benjamin Netanyahu has to feel really isolated in Israel, knowing that the U.S. public doesn't have much stomach to do anything more in the Middle East. I would not want to be in Netanyahu's shoes when the Mossad, the Israeli spy agency, tells him that the Iranians finally do have a crude nuclear bomb. And third, I would say that our ineptitude on this probably emboldened the Iranians. I am not optimistic that the talks that began today in Vienna with the Iranians are going to lead to any kind of a breakthrough. I think the Iranians have correctly concluded that the U.S. is not going to really push back very hard because we don't have the political will because the country has gone isolationist. So that's the second big theme. The third big political theme is one that really intrigues me for my industry, and that is this deep antipathy toward Wall Street, the big banks, business in general. Business groups lobbied like crazy in the last few weeks to Tea Party Republicans to get them to end the shutdown, to raise the debt ceiling, and most of these Tea Party members were indifferent to the lobbyists. They are not persuaded by Wall Street like you would expect traditional Republicans to respond. And Republicans I know are mystified to see this, to see their party become not very pro-business, very pro-bank. You add up all three of these things, and I would say that right now, the hottest politician in America is Rand Paul. I have good friends who I respect who think that if the nomination were held tomorrow, he'd be the nominee. Now, I think that the party will band together to ensure that does not happen. I think the party worries that he might only win 10 states. Barry Goldwater won 6 states in 1964. But Paul will be in the final 3. I feel quite certain about that. If the Republicans want to nominate someone who could get 270 electoral college votes, there's an obvious pick, and that clearly is Chris Christie. Who's lost a lot of weight. He had this lap band surgery. I saw him the other day. He's down about 100 from his high, and he's clearly running. But the problem with Chris Christie is that the base in the party doesn't trust him. They feel he's too moderate, that he has aligned himself with Obama too many times. I was at that White House press correspondents' dinner where Conan O'Brien had the line of the night. He looked out into the audience and he saw Chris Christie. And he said, "Governor, we made a horrible mistake tonight. We really apologize. We seated you with the Republicans by mistake." And the whole room cracked up because that's the problem that Christie has. I think he could win a general election. I'm not sure he could win the nomination. So the party has to find somebody who can bridge the two gaps. Maybe it's Marco Rubio. Maybe it's Scott Walker, who I think is an intriguing wild card, the governor of Wisconsin. But that party is going through some real changes, trying to decide just where they want to go. Isolationism? Do they want to be anti-Wall Street? A lot of things they have to work their way through. On the Democrats' side, I live in a city where Hillary Clinton not only has been anointed as the next nominee, she's been anointed as the next president of the Democratic Party by the media. And I dissent for one major reason. It's not Benghazi, which certainly is not going to help her. It's the following. After 8 years, the country almost always wants a change. It's cathartic. It's normal to say after 8 years, I want something different. What's her argument going to be? Vote for me, I'm going to give you 4 years just like the last 8? That's not a really compelling argument, in my opinion. Same problem with Biden, who I am told is running. That'll be amusing. So you've got both Hillary and Joe Biden saying, vote for me, we're going to give you another 4 years like the last 8. That's not a very strong message, and I think she knows that. I think she's going to have to work on it. And I think at some point there'll be someone on the left in the Democratic Party who will challenge her. The left views her as a crony capitalist, someone who supported the war in Iraq, who supported the bombing of Syria. And I think at some point there'll be a candidate from the left. I say this to my big institutional clients, and they throw things at me, but I think Elizabeth Warren will be in the picture at some point. I don't think she can be the nominee, but there will be someone on the left. So it's a very fascinating environment, one in which voters all around America are just despise Washington, and I can't disagree with that at all. But I would just say to all of you as investors that the important thing, in my opinion, is to focus on the big themes. And the big themes, whether it's energy independence or whether it's the Fed or whatever, I think the big themes are surprisingly good, are much better than the media would lead you to believe. So I'm going to stop there and would love to take questions, disagreements. Fire away. Yes, sir. Right. I often leave that out to see how quickly the first question will be on Obamacare. You know, we're all adults here, and let me just say, the rollout has been a disaster. And I have good friends who are Democrats who would say the exact same thing. In fact, Robert Gibbs, who was the White House press secretary, said in the last 24 hours that whoever was responsible for it should be fired, for the computer miscues. So it's not been rolled out well. Ironically, the ineptitude of the rollout has been overshadowed by the shutdown, and it hasn't gotten as much attention as one might think. Let me just say this. The chances that Obamacare will be killed or significantly modified are close to zero. Again, don't shoot the messenger. But I don't see any chance that Congress certainly could kill it. If you really want it killed, you would have to wait until the spring of 2017. That would be after the 2016 elections. If you have a President Rubio and a Republican Congress, yeah, you might be able to kill it in the spring of 2017. But between now and then, I think it's very unlikely. I don't rule out the device tax somehow in a deal in the next 48 hours being killed. Could happen. Harry Reid is pretty adamant that he doesn't want that to happen. But I think that there could be some minor tinkering with it, but certainly no delay in the individual mandate, anything like that. For all of its enormous flaws, this is going to go forward. I hate to be the bearer of that message, but I can't see a scenario whereby Obamacare is going to be killed. I mean, Ted Cruz tried. Ted Cruz is arguably the most despised person in Washington among Republicans because he led them down an alley with no exit strategy. He incited a lot of very young Tea Party members in the House, let's abolish Obamacare, with no exit strategy. So I just don't think the chances are very good that it will be killed. Two big implications. Number one, I think it's a drag on GDP growth and will be next year. And number two, it's still another reason why I think the Republicans will hold on to the House. Other questions? Yes, sir. Yeah, you're absolutely right. There was a big piece on the Today Show with Chuck Todd, who I know and is quite good, talking about how the middle, people who are centrist, between the 40-yard lines or wherever, are clearly the dominant faction in the entire country. But at the same time, the way the districts are drawn, I mean, you have some districts that look like, the large intestine. I mean, you've got like these squiggly lines where the districts are drawn simply to allow people to get reelected. And there's an outcry over it now. You have to wonder. I'm not smart enough to figure out what the last month and a half has done to public attitudes in terms of making real changes. I can't see any fundamental change in how we elect people, to my deep regret. I don't see a third party. I would love to give you guys a scenario where a third party was plausible. I mean, there is a guy in New York who's got about 28 billion reasons to run, but I don't think Bloomberg, at the age of 70, is inclined to run, and he's also militantly pro-gun control, and that doesn't go over well in much of the U.S. So I don't see a third-party movement. I think that you could see more incumbents than I would believe now get thrown out just because of a general anti-incumbent pox on all your houses scenario. But no, everything I look at that might be able to reform the system seems difficult to achieve, and that's why I'm a cynic. If I were God for a day, the first thing I would do would be to set an age limit. I think 80 is about, that should be about enough, maybe 75. Universities do it, boards of directors do it, and you had literally one Republican, one Democrat in the last decade, Robert Byrd and Strom Thurmond, who were literally drooling vegetables, serving just so they could set a longevity record. I mean, that's not right. I mean, I think an age limit is something that would make a lot of sense. But like all of these changes would have to be implemented by Congress, which means it's unlikely that they would do it. I saw, yes, sir, you had a question. There's no question in my mind that the most interesting politician in America is Chris Christie. I mean, he's one of the few politicians I've ever covered who did not need a focus group to tell him what to say. He says what's on his mind. Ed Koch was like that, but you don't see too many politicians who are like that, who just speak their mind. He can be rude. He can be a bully. I was in New Jersey last week. Some people said he needs to smooth his personality. My response would be, maybe not. Maybe you need somebody like that. But yes, I would hope to be someone more moderate who could try to come up with some solutions. You know, you could make the argument, though, that this path we're on toward deficits coming down and eventually there will be something on entitlements, it's messy, it's rocky, it's cringe-inducing, but we are making progress. If you want to just look at the deficit numbers, we are making progress. But I think, as I said earlier, to put the country through this and to have foreign investors see what they're seeing right now is not good for the U.S. brand. It's definitely not good. Yes, sir. I couldn't agree more. I thought we were going to have a third quarter, 3.5% GDP, great for revenues. We'll be lucky to get half that GDP because of what's happening now. So a slower economy means weaker revenues, and all of this foolishness in Washington is a headwind for the economy, you have to say. I saw a hand over there. Yes, sir. Interest spending has been remarkably subdued because interest rates have been remarkably subdued. I think what Treasury and Congressional Budget Office are warning of, and I share the concern, what if rates start to climb? I mean, rates aren't going to stay this low forever. I think, Elaine and all you'd all agree at some point rates are going to start moving up. That's when the debt servicing costs become a real problem. And I see people like Paul Krugman saying, we don't have to worry about entitlements. No, we do have to worry about entitlements, because at some point the debt servicing cost is going to get up to over 25% of the entire budget. I mean, that's a compelling reason why we have to start now and begin doing things. I try not to give my personal opinions, but I think those who feel we have to begin doing something with entitlement growth are correct if you have a long-term horizon. Let me look around here for any other. I saw, yes, sir. I would say that the confidence they have that they can seamlessly unwind borders on hubris, that, it's not that easy to unwind a $4 trillion balance sheet. I mean, they say that they will simply let all of these assets be held to maturity. I think most of them probably will. But with a balance sheet that big, you get into some market dislocations at some point. I don't think it's healthy. I think they agree. I think they would like to begin tapering as soon as possible. And I would say this word about Janet Yellen, since I have a lot of friends who know her quite well. She's a tough little lady. She's 5 feet tall, looks like a little white-haired grandmother, but she, I think, would have no hesitation raising rates if she started to see inflation psychology pick up, if she saw unit labor costs pick up or tip spreads, things like that, start to move. So my take she's told people who I know that she would have no hesitation raising rates if she saw any sign to do so. So I think the Fed is prepared to do what is necessary if inflation becomes a problem. But this idea that $4 trillion can be just unwound seamlessly, my friend Liz Ann Saunders says they might be able to do it. It's like a great skier who can stick the landing. Maybe they can, maybe they can't. But that's not a certain bet, in my opinion. Other questions? Yes, sir. Yeah, you're right. I mean, there's no Jim Baker or Colin Powell or Condi Rice. I would argue that John Kerry was spectacularly qualified for the job, but he made a couple of really bad rookie mistakes during the Syria thing, saying that we would just have an incredibly small strike, or I forget the exact word, but it was cringe-inducing. You don't give away your strategy like that in public. So, I don't know. It's hard to say. I'd say the problem starts at the top, and I just don't see a foreign policy that is coherent. I think that's one of the big problems. I see it. Yes. It's mind-boggling. I have a good friend, Charlie Cook. Some of you may know of Charlie. He's probably one of the leading political thinkers in Washington. He told me a story a couple of months ago that just left me astonished. That in 2012, an election year, Obama met with Pelosi and Reid no more than a dozen times, and met 0 times with most of the committee chairmen in the Senate. They're Democrats. And he met with none of them. There are several committee chairmen who haven't met him in 3 or 4 years. And I've heard it from too many people. And the thing is, Bill Clinton, he would talk to these people 12 times a week. LBJ would talk to them when he was in the bathroom, and seriously. And here you've got someone who, now, I don't want to make this an Obama bashing night, and he does have some skills, but I would say that his inability to mix it up and I'm told by someone who knows him that deep down, and he believes that the correctness of his views, the validity of his philosophy should be sufficient to persuade people in Congress to vote for them. It doesn't quite work that way. You know, Jimmy Carter found that out when he had to suck up to Dan Rostenkowski. I mean, you have to massage some of these giant egos. And the president, I'm told, and most nights, maybe not this week, but in most nights, he goes upstairs and watches ESPN. Well, I'll do that, but I'm not president of the United States. And I think I just don't think it's in his DNA. And even his strongest supporters, headed by the very articulate Maureen Dowd, has written in the New York Times that Obama lacks the DNA to get things done. He cannot bribe, cajole, elbow, sweet talk. That's not in his makeup. And we're seeing the results of that. Actually, I got a cheap laugh in mentioning Joe Biden. Joe Biden is far more skilled at getting things done. He got us out of the fiscal cliff, or he and McConnell. Biden was in the Senate for 35, 38 years. He knows how the Senate works. He knows how you can negotiate. I mean, that is a skill. You know, so just as Ted Cruz doesn't know how to legislate, I don't think Barack Obama knows how to legislate. And that's a big flaw. Yes? No, here's a story that this is mind-boggling, just makes you shake your head. Harry Reid is so unwilling to compromise. He wants to get everything he wants. He has banned Joe Biden from the Senate cloakroom. True story. He has said to Biden, we don't want you here because we're afraid you're too conciliatory, that you might want to compromise. Hello, I thought that's what you're supposed to do if you're a legislator. So no, Biden has played a remarkably low-keyed role in the last few weeks, and I think that's unfortunate because he makes a lot of gaffes, and it's easy to kid him, but he's quite skilled as a negotiator. I see another hand. Yes. Yeah. And I would even add one other point to the very good points that you made, is that a lot of them just finished paying $30,000, $40,000 a year for college and are now deeply in debt and have lousy jobs and won't pay off their debt for at least another decade, if then. So it's a very discouraging time for them. I fully agree. And I can't sugarcoat it and say things are going to turn around overnight. I mean, I really truly believe, without rose-colored glasses, had we not had this crisis, we were looking at a pretty good 2014. Unemployment coming down a little more, GDP maybe getting up to 3%. Recoveries, I've been taught by all my dear friends from the Fed, recoveries become self-reinforcing. And you get a recovery going and it's like a snowball. You wind down inventories, then you have to rebuild them and hire more people. You hire more people, they pay more taxes, they buy more things. It's a virtuous cycle. And I thought we were getting into that in 2014. You could see a lot of the signals starting to improve. But now we've just pushed that back. With all of this nonsense, we've pushed that back. You know, maybe by the spring of 2014, things will start to look better, but it's a very long slog. And I can't sugarcoat it. And you know, my talk tonight was largely designed to talk to a group of investors. And sometimes you have to say what is good for Wall Street is not necessarily good for the country as a whole. You have this widening income inequality that even people on the right acknowledge is a problem in this country. But all of the stuff I talked about is pretty good for the stock market. I mean, stocks are still within 4 or 5% of their all-time high. I mean, the stocks have had a very good year this year, as you guys know. But while all these other things that you describe continue to fester, it's a real dichotomy. Yes? Yeah, it changes the dynamics to a certain extent, but I would argue that a candidate with the right message could transcend what you just mentioned. In fact, I would even argue that getting 10 or 11 million new Americans through immigration reform is not necessarily a bad thing. These would be new citizens. Japan should be so lucky. Japan has a demographic train wreck. We would get people paying taxes, getting out of the shadows, working hard. I live in a city in D.C. that's filled with Ethiopians. Every Ethiopian I know has 3 jobs. They're religious, they're Coptic Christian, they're good family people. You know, I think that immigration, I would agree with almost every think tank except one that argued that immigration reform would have been a good thing. And it looks like that, like everything else, has stalled.
What about welfare and food stamps and more on the adult?
I think that if you have a society that's more dependent, it does change the dynamics. And I would be in the camp that would argue that there should be at least some minimal tax payment by everybody. I think everybody should pay a little bit. I understand there's a sales tax and there's a Social Security payroll tax, but I think that to make things a little more equitable, there should be a small contribution from everybody. And I would agree that in the NBC poll this morning on the Today Show showed that overwhelming a percentage of Americans, like 75%, felt that people who make over $1 million should pay a bit more on taxes. So it's on both ends of the spectrum. Yeah. Yeah. I talked to a really bright fellow about 2 months ago who was formerly the head of Medicare, a moderate Republican, very good guy. He said, we're never going to undo Obamacare because once you get free goodies, you know, it's free goodies. And some people are being subsidized to go on Obamacare. You'll never eradicate it once and it started basically on October 1. And we have a history, whether it's George W. Bush's Medicare prescription drug benefit or now this, once we get a new entitlement, however well-intended, it can never be eradicated. In fact, eventually down the road, we'll probably add more bells and whistles to it. And that is unfortunate, that we're coming into a society that has so many people that are totally dependent. Now, there are people like my mom who was living off my father's post office pension who resented it. She considered herself to be one of these people that Mitt Romney criticized. And there are people who truly are disabled, you know, who, although there's a huge scandal on Social Security disability, don't even get me started on that subject, how many people have gamed that system. But there are some people who I think would resent that and could still be persuaded to vote against what might seem to be their own best interest if the candidate was an appropriate candidate. What we need a dynamic figure who tells Americans what they have to hear, not what they want to hear. And that's why, I rarely do this, but I'll put my cards on the table. That's why Chris Christie intrigues me so much. Because this guy is like no BS. I mean, he tells you exactly what he thinks. And maybe we're at a point where we need somebody like that. Yes?
Could he be the great compromise?
Yeah, I think he could. I think he comes from a region of the country where he knows it can't be my way or the highway. I mean, he has to deal in that environment where the legislature in New Jersey is controlled by Democrats, and we get an election tomorrow night. Cory Booker will be elected, a Democrat from New Jersey. So it's a pretty liberal area of the U.S. So he knows he has to navigate some shark-filled waters to get what he wants. No, I do think he could negotiate. That's the thing. You know, Ronald Reagan always said, he said, if I can get 70% of what I want, I'll take that. I'll fight again another day for my 30%. These guys like Harry Reid or Ted Cruz, they're like, no, we want 99.8% of what we want. And that's why we have the problem we have right now. Yes. Yes, sir. It's a great question. If you didn't hear it in the corner, the question the gentleman asked was about business uncertainty. And as Elaine knows, the companies are sitting on record profits, just waiting to invest this money, to hire, to buy new equipment. U.S. business is flush with cash, but who the hell wants to make any kind of major decision right now with this kind of uncertainty? And I would argue this is becoming a major headwind to the overall economy. And once it's over, I mean, I'm assuming at some point it'll be over, there'll be some resolution, we'll move on to something else. that once it's over, I think all of this cash that's bottled up by corporations could be put to very good use. That's why I was so optimistic that 2014 was going to be a pretty good year. But until you get this resolved, I think business uncertainty is going to be a major negative for the overall economy. I can't blame business people. And you know, the irony, I had a speech 3 weeks ago in Rockford, Illinois. It used to be a big manufacturing sector, it still is. And to a person, every business owner who I saw that night told me their biggest problem is a lack of skilled labor. They would like to hire more workers, better trained workers. So these companies have money to spend, but no one's going to open up their wallets until we see all of this stuff in Washington get resolved. Maybe one more? I saw what? Yes. Well, it's a slow process. It's not going to come quickly. You know, the thing is, most of the politicians I know are decent people. They're religious. They're good family people. I mean, in a group that large, there's always going to be, you know, an Anthony Weiner who taints it for everybody. But when I look at that group, I would say that 98% of the members of Congress, if they heard me tonight, they would probably agree with most everything I said. So what's the problem? Well, I think the problem is that the way the system is now, with the gerrymandering, which we talked about, with the pervasive influence of PACs, political action committees, the role of money is something we haven't really discussed, is sort of paralyzed everything right now. And to be fair, there are really deep divisions right now in the country. I mean, the Democrats are saying we do not want to have any kind of hit to Social Security COLAs. I understand that position, but I think you've got to look at that. The Republicans are saying absolutely no tax increase whatsoever. We already got one in January, they say. So both sides are so dug in on their ideological positions, it's going to be awfully hard to move them. I think there's only one thing that could quickly and radically move Congress, and that, of course, would be a violent sell-off in the market, and I just don't see that. I think the market has gotten this correct. The market knows that there's not going to be default, and they know, despite all of the theater, the deficit's still coming down and we still have fiscal restraint. It's just a messy thing to watch. I think where the markets may be too naive is that if this continues much longer, you're going to have a demoralized citizenry and business that's not going to spend much. That's the big threat to me. Maybe I'm going to get one more, and then I'm going to be around, so if you didn't get a question in, just I'd love to talk to you. Yeah?
Is there any hope of raising the age? I'm obviously biased about that, raising the age for Social Security.
Yeah, I think, you know, Alan Greenspan, someone whose name we haven't heard much lately, famously once said, if you got 12 smart people in a room, they could solve Social Security in an afternoon. And I could not agree more. That a lot of it is just going up a little higher. Now, I don't mind. We got a kid who just started college. I'll be working till I'm 90. So, you know, but you could raise retirement ages a little bit more, and you could tweak the COLA, do a couple things the way we calculate the cost of living adjustment. Social Security is the easy one. Medicare is the one that drives you to drink. Medicare is really tough. There's only two answers on Medicare. One would be the Paul Ryan prescription, and that is vouchers and try to privatize it. The other would be just to ruthlessly means test. I mean, not just Warren Buffett or Bill Gates. You have to ruthlessly means test a lot of people in this room in Medicare. I suspect we'll probably go toward the latter, and it's going to be a very emotional issue in about a decade. But Social Security, in my opinion, is doable. It's fixable.
But it seems like people don't, the age, when it started, we lived 20 years longer on an average than we did when it started, but we haven't changed it 1 year.
Yeah, Bismarck set the age at 65 because no one in Prussia lived that long. You know, and now, yeah. Well, you have been a wonderful audience. Thank you all very, very much. Thank you.
Wow, wasn't that wonderful? I've had the opportunity to hear Greg several times speak, and he's never disappointed me. So, Greg, thank you. It's been a privilege to have you with us here in Indianapolis, and given everything that's going on, I know there were probably other things that you could have been doing, so thank you so much. And let's give him one more round of applause. Thank you. And you have been a very engaged audience. I saw a lot of notes being taken, pages being flipped, so I hope you enjoyed it, and thank you for all those insightful questions as well. And as Greg said, he will be around for a few more minutes. If Dave, if you didn't get that question answered, you can track him down there. But thank you all for being here and for sharing this evening with us. I know there probably had other options for you as well, but we're glad to see you always here. And this officially concludes our Bedel Financial Forum, and we hope to see you at the next one that we have. So thank you and safe travels home.